What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. So today, guys, this is an updated full Fibonacci course on everything that I've been able to put together in the past decade. I'm going to share all my findings as well as my real trades with you. And I really hope that this can change your life for the better. So please drop the subscribe, hit the like, and without further ado, let's get into it. Okay. So first and foremost here, guys, what we're going to be doing is focusing on the 4-hour chart. I wanted to make sure that I point that out, and I'm going to be going through all of my trades for the year, as well as the 10 years of data and 10 years of trading that I have on Fibonacci. Okay. So first of all, let's go to my Excel spreadsheet, which is going to have my trades here, and then we can go right into this. Okay. So this is actually a part of the seminar that I'm doing tomorrow. I decided to share it with you guys for free because I wanted to really emphasize Fibonacci and what I've been able to find, because I think it can change your life. Okay. So first and foremost right here, this is my data. I also have my trades over here. You can see some gainers over here as well as some losers. And where we're going to start off is with this Fibonacci harmonic dragon pattern. So let's go ahead and let's zoom in here. Okay. So this is the results on the 4-hour chart here with the Fibonacci harmonic dragon pattern. This is a variation of the cipher pattern that I used and I developed over time. And these are the results using multiple targets as well as multiple different stop losses, which I'm going to really focus on and teach you guys today. Okay, so we're going to start off with the 17th of January. That's my first trade of the year, which was right here. Okay, so this is back in 2024. This was my first trade of the year, the 17th of January. And we're going to start off first with identifying the pattern. Okay, so the main pattern I'm focusing on with Fibonacci, guys, is the cipher harmonic dragon pattern, which is an ABCD. So we have a low, a high, a pullback, a new high, and then a completion. This pattern right here is the most important pattern in Fibonacci, in my opinion, because, guys, everyone else is going to show you hindsight charts where the Fibonacci worked, but their anchors are always going to be very subjective. This pattern takes away a lot of the subjectivity in Fibonacci because it waits for a pullback and a new high. This right here, waiting for this pullback and this new high, is going to help you to find this anchor point, which is going to make your trading actually more reliable and less hindsight. Okay. And this is why I use this pattern, because I'm a real trader and I need to actually get a pattern that's reliable. I can't just take every trade. So for example, if you were in here, you could say, okay, I could draw Fibonacci from here. Okay, this is nice. I could draw Fibonacci from here. What about this? Yeah, nice little Fibonacci here. You could say 100 of those different things, but it's all hindsight. So what I'm using is the harmonic because it takes away a lot of the subjectivity. So let's start off here. So I ended up going long right here on the 17th January. Why did I do that? Well, let's look to the left. So anytime you're doing harmonic, you have to look to the left. So this anchor point here was at the 5th of January. This was at the beginning of the year. You could see it was a nice long wick, swept out this low here, put in this outside bar. But that's not what I care about. What I care about is, did it pull back? So if I come off of this Fibonacci from low to high right here, you can see we did pull back. We pulled back to the 618 Fibonacci here. Okay. And then this right here is the first half of the pattern, like this. Okay. That's the first half. So now where do I move my anchor? We move it to the new high right here. And then we complete it wherever the 618 lands. So coming off of this, we just take our anchor point and draw it right here. And remember, this little spot right here showed us right here. It showed us algo buying. Okay. Because it was a previous 618. So I know that, okay, over here, if we go back over here, you can see that 618 buy. I know that, well, somebody stepped in and bought this market and ran it up right here. Okay. And this move right here, guys, this was about, 100 points on one contract. That's $5,000. So somebody took this play here. So if we pull back here, right, if we pull back now, that algo, that institution, in my opinion, could retry the same setup, right? Using this low anchor and using this high. Basically, what they would be doing is buying the higher low in the trend, right? So this is why I wait for this to establish itself first, and then I'm going to go ahead and draw my pattern like this. Okay, so there's my 618 entry right there. Okay, so let's go back to the spreadsheet now. So this was the 17th of January here, and this was my first trade of the year. And you can see I've also just posted some of my gains here, so that you guys can see these are actual trades that I'm taking. Everything that I'm sharing with you are real trades that I've taken. Okay, even these losing streaks here, I've been through all these drawdowns. So I want you guys to understand that. This is the only reason I can talk about this, is because this is what I do, and this is real trades. I would feel extremely guilty, and it saddens me when other people come on here talking about trades and they don't take the trades. But you're accountable. If someone else is using trades based on your information, at least the decency you should have is to take the trade, in my opinion. Okay, but let's continue here. So all of these right here, these are different targets. You can see 0, 27.2, 50, 61.8, 78.6, measured move, 1.272 extension, and 1.618. So let's go back here now, and I'm going to double click on this, and I'm going to put on my full. These are all my levels, all my extensions, etc. The main entry. So this model is entry is always on 618. Okay. So the entry is always on the 618. I don't care about anything else. With this basic model, it is using limit orders. And what I love about that is, as this market is coming down, my order is waiting right there on the 618. I'm waiting for that to come to me. Okay. So now we're going to start off with the basic concept of stop loss. Okay. So let's say we're going long here. Where do you put your stop loss? Well, the standard way that you've learned Fibonacci is using the swing low. Okay. But I found over time, to double or even triple my profits, I can use a tighter stop loss. And that's what I'm about to teach you today. So the first stop that I used was the 90 stop loss. And this is basically, it's not any Fibonacci number. It's just 10% away from the low based on the range. And I found the 10% mark to be something very effective, because generally speaking, if it hits this 90, it's going to hit that low. So why would I risk off of this low? There are types where using the low is better, but the reason why I want to do the 90 is because I can have a better risk reward ratio. Then, so let's go ahead here and let's go ahead and measure out our target. So this trade right here, if I had held this trade to this point right now, I would have been up probably $150,000. Okay. Because this was the low of 2024. And obviously, this is hindsight, but I use a systematic approach to taking targets, because the market is not always going to be trending and it's not always going to be easy. So I always use targets. So my main target that I'm trying to get to really is this measured move, which is 100% of this range. So if we take the measuring tool right here, or we could just use this arrow, this is the range. Let's copy and paste it. That's, oops, it doubled up here. One sec. So this is the range. If I copy and paste it and then I pull it up here, it's exactly 100% of that move. So the goal is really to get to this 100% measured move throughout this life of this trade. That's where I'm trying to get to. Along the way, we'll be taking profit. Along the way, we'll be moving stop loss up and trying to minimize the risk on the trade. But ideally, we want to get to this 100% measured move. And if I double click on this, these are all my Fibonacci settings. There's two other levels here, negative 1.272 and then negative 1.618. Okay. And I found that anything above the negative 1.618 in the long run, anything above this target is not really that profitable, because it's such a huge target. And to get there, a lot of times you're going to sacrifice a win rate. But in this situation, we could have definitely gotten there. Okay. That's the negative 1.618 right there. Okay. So let's go back now to our spreadsheet here. So I tracked all of my trades here, and I use the negative 1.618 as the maximum target. And you can see it produces about a 7.9 R with a 90% stop loss. Okay. However, there's two more stop loss placements we can do. Okay. So we can use the tighter stop loss, which I'm going to teach you now, is the 78.6. Okay. Remember, the tighter your stop loss goes, you're going to sacrifice win rate. There's no way to get around that, because the tighter you go, the higher chance of you getting hit. However, are you willing to do that sacrifice in order to make more money on your winners? That's the thing you have to decide on your own. And I'll tell you what I'm doing. I have chose to mix it up depending on the setup. Okay. If there's a big range, you can use a tighter stop loss, and a tighter range, you can want to use a wider stop loss, because there's more chance of you getting hit. So this range is pretty massive. There's a 100-point range. So in this situation here, moving up my stop loss to the 786 and entering on the 618 is viable. And that right there, based on what I've been tracking, if we do 100, this is the measured move, 36.9 R, 37 R on the 90, and then using the 78.6 stop, you go from 5.9R to 9.59R. It's almost double. Okay, so that's pretty big. And you can see here, you do lose a little bit more trades. Here's the win rate and everything like that. You do lose some more trades. So for example, let's go here. So this on the 90 stop, you would have survived here. And on the 786, you get taken out. This same thing right here. So there were two more trades in 2024 where the 90 stop actually saved you, and the 786 stop took away because it actually came back and touched it. And then the final stop loss that I have here is something that I created recently. And it's not really a stop. It's not a Fibonacci by any means. It's something that I've just basically decided that based on my data, it makes sense, is the 0.75. Okay. And this is when I want to go really aggressive. I'm cheating a little bit on the 786. I come up to this 0.75. And then what does that do? Well, let's go ahead and let's take it to the measured move now. And let's see what that difference is. Okay. So coming all the way up to the measured move right here, we have 12.5R. Okay. And then what we can do is just let's paste this again here. And then let's bring it down to the 786. And you'll see that this is 9R. And then on the 90, it is only 5R, 5.6R. So it's actually a pretty huge difference. Okay. And I've compiled all the data here for you guys. And you can see that the tightest stop loss makes you the most money in this particular situation in 2024. And that's probably because the market was trending. I have 10 years of data on this as well. And some years having the wider stop loss is going to be better for you because you're going to be able to not get stopped out. Some years the tighter stop loss is going to double your profit, even triple your profit. So it's a risk to reward in your brain that you have to take. And I always recommend, if you're starting off, use the widest stop loss. Use the 90% stop loss because it's going to give you a higher win rate. You can see the win rate higher, and you're going to be able to manage the trade better because you have a wider stop loss. You can tighten up your stop loss over time. Okay. So what I just taught you was limit order entry. Now there's another way of entering, okay? And this is called stop limit entry, okay? So instead of getting in blindly on the 618, you can wait for it to confirm and break above. So this is my new data I've been able to put together. I've been trying to implement this recently, but I haven't done this in the past. I always just buy on the 618 because I love being the first person to arrive with the best entry. And I'm kind of blindly going in, but I know if I'm right, the algo is going to bounce right away. And you can see on the 618, that's what happened. It bounced it right away. The other thing we can do is wait for it to cross a certain Fibonacci level on the way up. And the one that I've been testing is the 50%. Okay. So what this pattern would look like here is once it touches the 618, once it crosses over the 50, that is your entry. And then once it crosses over the 50 here, you have the same stop loss that you would have used normally. So either the 90, the 786, or the 50. And then another thing that I've developed over time was let's move this 750. Let's try a 710 right here. So where is it? My stop right here. So let's move this to 710. This is not a Fibonacci level either. This is just something I've been testing because once you cross that 50, if this trade is going to work, it shouldn't really come back down and break the 618. So you could even go tighter and risk the 618. That's probably the most aggressive I'll go. But the reason that you want to do tighter stop is because you either get a better risk reward, or if you want to just trail your stop loss quickly, you'll have a smaller loss. Okay. So this is the new revelation that I got over my trading is why not wait for it to cross back over? Okay. So let's go take a look at those results. So crossing back over, you could see it is a little bit less in terms of gains, but what you'll notice here is the win rate is higher. Okay, so the win rate is higher than you have a 32% win rate on 31 trades versus a 26% win rate on 9 out of 10. Okay, on the 90, 786, 750, and this is the confirmation. What you'll notice is the win rate here is really about 20 to 35% because I'm going for big targets. If you want to increase the win rate, you can go for very smaller targets. I'll show you a little bit down below on day trading and go for scalping. But when I go for these swings, I want to get paid because I have to hold it for multiple days. And for me, for that to be worth it for me, I need to be getting big money because there's a lot of exposure and risk when you hold something overnight. Okay. So now moving on from there, the last thing we can do is called candlestick confirmation. And this is what I use a lot in day trading, and I'll talk about it in a second. But we go back here. Here is your candlestick confirmation. So candlestick confirmation, there's two main bars, inside bar and outside bar, that I'm looking for at the Fibonacci. So in this case, we had the inside bar. The break above the inside bar is here. You put your stop loss below the inside bar. There's your entry. And the same thing with the outside bar right there. You could have taken this outside bar for even smaller risk. So the only downside about candlestick confirmation is sometimes you don't get any confirmation on the level. Okay. Sometimes it just rips without you. That's why I like getting in with the limit order, because I want to make sure I'm in the play. Because if I miss some of these trades, it could be the difference between me making, 20, 40, 50 grand and just sitting there and getting FOMO. Okay. And that's very important for your mental. So in this situation, it's picture perfect. We have the inside bar, we have the outside bar. These are part of my free indicators, my golden indicators. Okay. So you guys can download these and add these to your chart. But there is the confirmation. So with the confirmation, you have to understand you may not get the signal. Okay. You may have to wait. You may miss the move. And that's why I prefer the first two methods. But the candlestick confirmation, I love to do it more on day trading. And we're going to talk about that in a second. Okay. So let's go back over here. All right, guys. So I just wanted to, so that concludes the first part with Fibonacci harmonic dragon pattern, less subjectivity, extra confirmation. This is all, I'm talking about the S&P 500 futures. We're going to talk about stocks now. We're long-term investing, leaps and options, and we're also going to talk about day trading. But remember, what I'm showing you is based on futures. Every point is $50. I have a full course on futures trading, but you can also do this exact same setup with SPY options or shares if you want to as well. Okay. And then, so I just wanted to show you some of my bigger gains this year. These were my big ones. So right here, 15,000, 16,000, 3,000. This was me getting trailed out. And then we have this one for 6,000 over here. And I just wanted to show you this table right here is the most important thing. With the 3-to-1 risk to reward, you only need to win 26%. And 4-to-1, you only need to win 21%. And that's out of 100 trades. So we go over here and you can see, let's look at the 3-to-1. You could see that how having a greater risk to reward ratio, even though the win rate is lower, can really impact you. But when it comes to day trading, I like to actually do the opposite. I want to have a better win rate, high win rate, and small targets, because the day trading, you got to get in and out in the same day generally, right? So you don't have enough time for these trades to go for massive targets. Okay. So let's go, first of all, let's go back to the stocks and then we'll end with the day trading. So I have three examples here. NVIDIA calls, Amazon leaps, SPY leaps. Okay, so I'm going to share with you some of my bigger gains this year. And obviously, guys, I'm showing you a lot of the potential here. But every time we see -1 here, I lost 1R every time. Okay, I lost 1R, but I'm still ending the year positive. All right. So the thing with stocks that I like to do is I like to bet on stocks that I want to hold. Okay, by betting on stocks that I want to hold, just one second here, guys. Let me just fix this. It allows me to, if the options go really well, I can essentially just convert those options into shares and continue the trade. So NVIDIA, this was a 241% gainer, and this happened in September. So let's go and apply this pattern now to stocks. Okay. So we're going to go here and we're going to type in NVIDIA. Okay. So this play, again, I'm going to the 4-hour. You can use this on any time frame. I like the 4-hour because it's basically the daily chart split in two, right? So we're going to go here, and this is the pattern right here, guys. Here's our 618 buy. This was back in September. And what I'm going to do here is I'm going to show you the harmonic coming from the low, high, pullback, new high, 618 completion right there. Okay, so that's the harmonic we talked about. And this was a major anchor point here, because if you look at this, NVIDIA had dropped at this point. It was 35% from highs. And this was because of that trade. It wasn't the trade war. It was an actual war news back in August 2024. So this is what I used right here. And to make sure that I had the right anchor, I took this Fibonacci from low to high, and you can see that we had a reaction in 618 right over there. So that gave me extra confirmation that this trade could be a winner. So from there, I waited here, guys, for this pullback. This pullback was about a 20% pullback on NVIDIA. That's the other thing that I want to talk about here. So let me just clean up this chart a little bit in case you guys are getting confused. We'll go back to the 618 here, and then let me just delete this one over here. Okay. So 106.18 right here is a 618. So with stocks, I knew I wanted to be in Nvidia long term. So I started off with some options, some leaps, some short-term calls. If you want, if you can't afford leaps, you can do, I would at least do a few months out for the calls. You can also do spreads if you have a very small account. But right here, the anytime you have a major 618 Fibonacci pullback, it's going to usually line up with the stock dropping at least 5%. And when you have names that are very volatile like Nvidia and Tesla, you're going to have pullbacks that are like 10, 15, 20%. So this is why I love using the 618 Fibonacci with these stocks, because it's going to allow me to not only get a good deal from like a Fibonacci if you're just looking at the chart, but if you think about it logically, if the stock is down 15, 20% in the last month, it has a good chance to bounce back, especially if it's a market leader, right? Just common sense. Institutions are going to be waiting for these big pullbacks, in my opinion, to load up more, right? And that's exactly what happened on Nvidia. So it took this play right here, guys, and I rode it all the way to 241%. Took it, took some profit. Then I started to put a little bit of it into shares, okay? And now we're actually at the similar point again on Nvidia. Let's go back here. Let me just delete these guys here. We're at a similar point now on Nvidia where we came back to the 618 right here. This is coming off this August low to this high. This is actually a giant harmonic pattern as well. See that? So that's pretty beautiful right there. And I've been loading up at 114 on Nvidia as well. So beautiful. Absolutely love Fibonacci. I think you really need to make sure you're using it with the right context. The harmonics is going to help you to be less subjective. Okay. All right, let's go back. Okay. So right over here, guys. So we had the Nvidia 241%. Next thing, we're going to look at SPY leaps. So leaps, how can you use this on leaps? So let's go back now. We'll go to SPY. So leaps are another way of basically you buying a stock and mimicking shares depending how deep in the money you are and using less capital. Okay. So we've had this giant 618 pullback here. This is SPY recently here. You could see we've been holding the 618 levels here and the 786 as well. I don't personally trade the 786, but it is a great Fibonacci level. I generally just stick with the 618. I might average it out on the 786, but I generally don't do it because I don't want to mess up my risk to reward factor. Because a lot of times the 786 may or may not hold. The win rate is a little bit lower than the 618. So I just bought leaps when we touch his 618 here for the end of the year on SPY. Same type of concept here, coming off this low high. Here's your first pullback, there's your new high, and there's your 618. And you can see in this situation here, we had a lot of chop, and it also, took some time to work. I was down on these for a little bit before they push back up. And that's one of the main reasons why I like using options as well. So I want to talk a little bit about that with these leaps here. When I trade options, I don't have a stop loss. What I put in is what I'm willing to risk, what I'm willing to lose. Okay. And with the options here, guys, you have to remember what you put in, you're willing to lose, because the premiums can go to zero. However, when I'm trading futures, I must have a very structured stop loss and target because it's on margin. And when you're using margin, it goes both ways. You can get margin called. But when I'm using options, it's cash. I'm using cash, and some of you guys will benefit better from using cash because you don't want to get into the margin game. And I totally understand that. Okay. So the next thing that I want to talk about is Amazon. So Amazon is one of my biggest holdings here. You can see I have a lot of shares and a lot of gains. I've been using this to really, really develop myself over time on Amazon. Okay. And with Amazon over here, you can see these are one of the plays that I like doing, buying leaps and then converting those leaps into shares to continue the gains. I also try to do this on Tesla, and you can see this one was a 330% winner. I'm going to be completely honest with you. I mismanaged this Tesla trade here, but I just want to show you the potential with the fibs. That it's not on the fibs. This was on me with Tesla. Amazon, I killed it. I could have done a lot better on Tesla. But anyways, let's go back to the chart here. So we're going to go over to Amazon, and I'm going to show you what I did. So this is where I bought the leaps on Amazon right here. So I already have the 618 pulled up for you guys. And then from there, once it expired, early this year, it expired. I converted those into shares, and that way I'm still able to continue with the play. But there's been many times in the years that I've been using Amazon 618 dips. You can see like throughout 2024, we've had a lot of these 618 pullbacks, and the hardest part is picking the anchor. Like, why here, why here, why here? Like, why would you put it there? And that's why I always try to use the harmonic. So let's use this one as an example here. So let's try to, so let's go back to this one here that I took. Okay, so let's go back to this one that I took. So first and foremost, we're coming off of this gap up over here on the chart. And then you can see we have a very shallow pullback and a new high. Okay. So this was my starting point, because once I see a pullback, a good pullback here, this one went right close to that 382. That's enough for me to have the first part of the pattern. So like this. Okay. And then the new high here, and then the completion will be somewhere down here. So we can move it up like this right there. Okay. And so you can see on this trade, I did take some heat on this, right? We came over to the golden zone here. We went sideways for a little bit, and then we got going. And that's one of the benefits and beauties of options. If I had leaps, I don't care about having a stop loss. That's one of the main things I wanted to show you, because I'm willing to lose the premium I put in. Whereas when I was showing you futures, it has to be systematic, because if you don't have a stop loss, you're trading with highly leveraged product and you can get margin calls. So make sure you have the balance. This is why I do the mixture of options and the mixture of futures. Okay, so let's continue now. Now I'm going to wrap this up, and I'm going to talk about, what about day trading? Well, what about day trading? Okay, so with Fibonacci and day trading, I love more using the candlesticks. Okay, so this is an example here. We're going to go look at this one. This was me making $900 in 5 minutes on using futures contracts. And then recently, last Friday here, I was able to make, so this says 10K, but I had 4 contracts, and it's taking the P&L from my original 2 contracts. So it wasn't 10K, it was more like $800. But the swing that I had on, the broker realized that swing first. Okay, so I hope that makes sense to you guys. But so ignore the 10K there. I'm still holding that swing, but I'll show you that. Let's go to where we are in futures right now, and I'll show you that trade. So this is a current trade I'm in right now. So this was, if you guys have been following along in the market, this was the 618. This is very similar to last year, January. It's kind of crazy because it's the same pattern. So I'm doing the same thing, right? So right here, this was off of the trade war, trade tariff news. Let's go back to full screen. And I went long on Sunday when we went down, okay? And this is another key benefit of trading futures, is that I got in long on Sunday after hours, okay? Sunday after hours when the market is closed. This happened, the low of the week was at 11 o'clock in the night on Sunday. So I love having that balance again between futures and options. They have different goals and they have different pros and cons. And one of the main pros with futures is not only the high leverage, but being able to get in after hours. If I didn't, so at my peak when we were up here, I was up about 15K on this play. So I'm back down to about 8 or 9,000 because we did pull back a lot, but I'm planning to hold this hopefully to get to the measured move, as you guys have seen in the seminar. But from here, being able to get in overnight is so powerful. And let's go now. I'm going to take you to some of the day, to the day trade, and I'm going to show you an example of what I did last Friday. Okay. So we're going to go here, and I'm going to go to the 2-minute chart for SPY. And this is Friday. So Fibonacci is fractal in nature. It's happening on every time frame, from the 1 second to the 1 minute to the 5 minute to the hourly. And this right here is a little day trade that I like to take here. Okay, so this is Friday. We gap up, we push higher. Let's take a look at this right here. We take our Fibonacci from low to high. This is the first 15 minutes. And you can see that we pulled into the 618. We filled it, and we filled the 786. We filled both of them, right? But what I like doing is waiting for that candlestick confirmation. So here's the 2-minute chart. We got this outside bar confirmation candle. I love the outside bar for my confirmation. I just went long above that high, put the stop loss at the low of the bar, and I just scalped it. Okay, coming off here, got to a 1-to-1 risk to reward. I took a little bit off, moved my trailing stop loss up, and then you can see on the flip side, the Fibonacci extension, the 0.618, we could see that that was actually the high of the day, and that one was a massive winner. That you could have probably made 100,000 on that trade if you sized, accordingly. But that's the whole benefit of day trading, is you can really just drill in, go quick in and out, make your money and walk away. And if you guys want to see more about the Fibonacci extension, I kind of hinted at it in this video, but drop a like and leave a comment below if you want to learn about Fibonacci extension, because that is one of my go-to reversal patterns as well. Okay. All right. So going back to the spreadsheet here. So these are some of my gains on the day trading. Day trading, in my opinion, is very subjective because you have to understand what's happening in the week. Where's the news events? When is FOMC, PPI, CPI? Is there news at 10 a.m.? So it's not easy to backtest and have data on day trading. I think backtesting and day trading is kind of bullshit. So what I want to do is just show you guys my gains and then also talk about, like, I've been on a pretty hot streak for the beginning of this year so far. I haven't really lost too much. And I've been able to manage my losers by using a trailing stop loss. And then also you guys, I have a little section I'm going to talk about multiple targets, okay, which is very important. But anyways, there, guys, so I just wanted to show you that. I'm not going to get too much into day trading. It's a whole nother course. But if you really like this content, if you like what I've been talking about, I try to share with you everything. It's I can't even tell you how many hours of my life I've given to trading and testing and Fibonacci. And the main reason I'm on here is to really share it with the community and share it with you guys, and hopefully it can change your life. One of the things I really hate, and I hate seeing, is people chasing breakouts and getting their account blown up because they're buying weekly, DTE, and just getting blown up. Why not try that on a Fibonacci and lower your risk and stay around in the game a little bit longer, so that way you can actually succeed. It's a numbers game, and I want you guys to understand the Fibonacci puts the numbers in your favor because you're getting the dip. You're using the trend to your advantage. And that's my mission, and my purpose is to share that. So please hit the subscribe, drop a like. I'm going to be doing some giveaways as well. If you can comment Fib King below, I really appreciate that. Let me know if you have any questions. If you want to see the day trading seminar, I could put something together for you guys. But I'm super grateful for you guys, and I really hope this video helps you guys out a lot. Thank you so much. God bless you guys. Take care.